you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions.
Hello and welcome to the Morningstar series, Ask the Expert. I'm Emma Wall and here with me today is Ian Dial, Head of Estate Planning for Tarry. Hello Ian.
Hi there.
So we're here today to talk about estate planning. We thought we'd go right back to basics and start with the importance of writing a will.
Well, wills are fundamentally important because obviously estate planning is really about how you pass on your assets to the people that matter to you, and the only control you've really got over that is your will. Although the will is important for passing down the assets, it can also be used as a tax planning vehicle as well. So for people who maybe have been widowed in the past, by structuring their will in the right way, they can actually capture potentially additional nil rate bands that may have been left to them by deceased spouses. So not just in terms of controlling the assets, but also as a tax planning vehicle, the will is fundamentally important.
And say the worst happens and you're not able to make a will, who is exempt from IHT? Because there's a spousal exemption, isn't there, even if you don't make a will?
Yeah, so within the will, any gifts to spouse or civil partnerships are exempt. Any gifts to political parties are exempt. Any gifts to the nation, so if you leave, for example, land or property to the National Trust, and gifts to charities. And there's some further legislation that says that if you leave more than 10% of your net estate to charity, that's broadly speaking your estate less than nil rate band, then the balance of the estate will benefit from a 36% tax rate rather than a 40% tax rate. So again, there's some planning you can do within the will for those who wish to be philanthropic with their assets.
The will, if you pardon the pun, is a sort of end of the road for IHT planning. Let's have a think about what you can do now. So while you're alive, you can gift a certain amount away per year, and that will reduce your estate and be free from tax, won't it? In what instances can you gift? People can gift at any point, really. I mean, the question is how that gift will be treated. So there are certain gifts which are exempt. They're immediately exempt. So if I make them this morning and die this afternoon, they'll be exempt. So the key ones there, I suppose, would be the annual exemption of £3,000. Gifts in consideration of marriage. So if my daughter gets married, I can give £5,000, or my granddaughter at £2,500. Gifts out of normal expenditure. So any gift of any size is exempt, provided A, it comes from income, B, it's regular in nature, so it's not a one-off gift, and C, it doesn't affect your standard of living. And then gifts between spouses. But if I want to gift beyond that, I can still do that. It just means that following that gift has to be outright and must live for 7 years. So they would typically be treated as potentially exempt until that 7-year point. And I think that's something that a lot of people don't know. They assume actually that there are restrictions on being able to gift to your loved ones. But actually, as you say, if they're absolute, there aren't those restrictions.
Correct. The only time it's restricted, if you are going to use trust, there are limits on how much you can put into trust these days without creating a lifetime tax charge, so you need to be careful of that. But many people forget the basics. Many people look for product-driven solutions as opposed to some of the simple solutions like gifting money outright to their children, or even spending money to some extent. Many people forget about spending. I'm not saying spend for the sake of it, but many people, when they get to later on in life, it's very difficult for them to get out of the mindset where they've saved all their life and they see their net worth going up to a point where they feel comfortable spending their capital and seeing their net worth going down. Because no matter how wealthy they are, there's that nagging doubt at the back of their mind saying, will I need this money or not? But some of those solutions could be the best solutions, and they're very simple solutions, frankly.
And you've talked a little bit there about creating trusts. I mean, how would one go about that? That's the sort of thing that you do need professional help on.
Yeah, it's not just which is the correct trust. It's who should fund it. If you're using multiple trusts, there's a right and wrong order. So it is a more complex area, but often for most people, the best solution is a combination of outright gifts, maybe gifts to trust. Trusts really, I suppose, have the big advantage of protecting assets. So all a trust is a form of gift. But unlike an outright gift, with a trust, you've got some control over potentially who benefits, when they benefit, what they benefit from, how the money's invested in the meantime. So the question is, how important are those protective benefits? So do you have a daughter who's about to get divorced? Do you have a son whose business is about to go bankrupt and you're worried about losing money through bankruptcy? Have you got beneficiaries who are long-term sick and are going to need protection throughout their life? Maybe you're trying to protect their benefits. So that's where trusts are really useful, is protecting assets in those circumstances.
So to round up, make a will. Be generous with your loved ones and don't forget to spend on yourself.
Absolutely.
Ian, thank you very much.
No problems.
This is Emma Wall for Morningstar. Thank you for watching.